Hello guys, welcome to the Trading Parrot. Why has Bitcoin surged so sharply over the past 2 days? And Bitcoin price analysis now sees 111k liquidity graph next. That means that 8 hours ago, the alpha of having liquidity there is becoming common knowledge, specifically for retail. We're going to have a deep look at how things are progressing with the pump, the selling wall that we are currently seeing, and how close we are getting to the RSI target of 74 on the 4 hour. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. While you're here, make sure that you don't miss any of the other videos. I know that even if you are subscribed, you are not getting notified by this tricky YouTube algorithm. If you really want to force the hand and get notified, enable the notification bell. Follow me on Telegram, Instagram, Twitter, whichever you prefer. I'm sure on one of those you're gonna get notified when I put out one of these valuable videos. If you're planning to trade Bitcoin, consider getting the $500 for free position airdrop that Bybit is offering to trade on any of the coins listed in here. All you have to do is find the Bybit link in the description, click on it, register to claim, and then make sure that you make some profits because you get to keep them. And yes, look on-chain, which is a platform that offers a combination of TA with on-chain data, is talking about what could be the explanation of the surge in the price. And maybe we can find an answer on this specific move in here that is very intriguing, not just from the point of view of the shape of it, but also when we zoom out and we look at the 15-minute, how babysit it was all the move. I'm talking about the support constantly flipping the same sizes as if they were wanting to draw with a pen this move in the price. Well, possibly, maybe this is the explanation. Most of the buying came from ProCup BTC, which purchased around 5,000 Bitcoin. On June 23rd, they announced 1 billion merger and had raised more than 750 million. In less than a day, they spent 386 million around the area that we find extremely weird. And you know that when they buy, it's not just a single market buy. Don't be silly. Sizes like this, they tend to be either over the counter or they use certain techniques to appear as if it was retail. And in no way I'm claiming that I found the final answer, but during the whole move up, we were seeing the retail orders on CryptoQuant and all the search in here of orders from the orange size positions of 100 to 1k being more or less around the time where we start with the pump. Not necessarily that line at the end, but in the beginning they were very involved. It's the opposite with the purple sizes that you see in there, that they just started to get interested. Normally it's completely the opposite. Purple whales initiate pumps. They're always responsible, the first ones to hit the trigger, and then the price follows through, and then the rest of the sizes get involved late. There's been just another purchase around 107k of 1200 Bitcoin. And yet this is a bit disappointing. I like it when the alpha is still a little bit of a secret thing, but well, maybe I'm being naive, but the worst that can really happen if something is going to Cointelegraph and sources like this that go all over the place. We read the Cointelegraph with completely different motivation. We read it to know what retail is swallowing. We don't read it to find the actual alpha. Any alpha that is already here is degraded most of the time, if not completely invalid. Bitcoin order book liquidity is increasing as BTC price consolidates its recent relief bounce. Market participants see a liquidity grab at 111. The monthly close is already in focus as Bitcoin eyes modest gains for June. Something I didn't cover this morning as well is that the aggregated open interest remains in the area of the breakdown. We've been using for pretty much over a year the aggregated open interest as a leading indicator to hint us on the direction of the price. In this case, open interest aggregated going down, it means that there is less interest from future traders to get involved in this area. And of course, in a bull market, we are always expecting the open interest to increase and increase with every single potential new range that we discover as we go up, we get the aggregated open interest also to increase. For example, in this range, we were within the 20 billion, in this area in here within the 30, and if this is a successful continuation with a bull flag in here, we should be expecting to take out the 37 billion next. But since this is breaking down, we get that feeling that we are within a bull flag of the aggregated open interest, which is bullish, but at the same time that is breaking down. So I will continue to monitor that and see how it develops. If you're just waking up and you missed the video of my morning, we talk about this CME Gap located at the Binance price of around 106k. From where we are, that is a move down of roughly 1.8k. It hasn't been filled, and this is how I left the Bitcoin status this morning. All that's new is the CME Gap that I added. I forgot to write it down this morning. This particular slide is available for anyone in my Patreon to follow it live anytime I write things in here. You can just have it in a separate app and continue to read it. Once you join the Patreon, just ask me for the link and I'm happy to share it. Okay, let's go with the 4 hour and let's see what is the current progress. We've been going little by little, breaking each individual resistance, turning it into new support. The last one was around here at 60, and we say that if we manage to hold this area of 60, that we are probably gonna go into 75. And here we are now pinching 70, being just 4 points away from that level. So what we need to do now is we need to look into where is that green value of the RSI in the price and where is the support in case we were to come back down in a sharp way. So I already have the 74.46, and below we need to put 55.2, and that's gonna give us how high can we get with the price if we were to pinch that level. Remember that the price can carry on slightly higher at the cost of producing bearish divergences, but knowing where the momentum could peak can give us a rough estimate when the price can peak next, which is not necessarily guaranteed, but we play with probabilities. There are no certainties in trading. So if we were to hit that 75 tonight, it's located at the moment at 109.336. And if we look at the past 30 days, tonight the highest liquidation level at the moment is precisely at 109. Interestingly, the 111 is not just taking the second place, but now is taking the third place in the highest liquidation of the past 30 days. After 109, we have in here 102.9, 103 in the second place. Just take note of that in case we were to hit the 109 and not necessarily get into that 111 that now is common knowledge. So we cannot really think that we are going to get there by surprise. It's no longer a surprise. It doesn't mean that it cannot happen, but you know, I tend to bet against the things that are in everyone's mouth, and I think that is a good practice when you're trading. So in between here and that target of 109, we have still this bearish order block that was responsible for taking the price down around 10k. So it's supposed to be significant resistance. Right after that, we have 111, which is another bearish order block, this time that threw the price down 12.6k. Those two enemies are right there together with the momentum calling for a potential top. After all, we are still inside this channel. If we broke out from there, which is the natural question that the bulls are going to say, but why we cannot go beyond that point? Why we cannot break out from 74? Absolutely, that's the right question. You can break out from 74. Now, the question I ask you, would you trade a breakout of an RSI at the level of 74, expecting it to go to where? 90, 100? Sure, that can happen. Is it possible? Yeah, everything is possible, and the point in here to become a better trader is to think what is more likely, not what is possible. When we were going down in here, I read a tweet from someone saying, oh my god, what am I gonna do? Benjamin Cowen said that it's possible that we go to 50k. And I read that and I ended up, what is the point of saying that something is possible? I guess you mean it's likely or less likely than something else? There is literally no value on saying that Bitcoin is possible to go somewhere. Bitcoin can go to any price, including zero. All prices are possible. And notice I'm not criticizing Ben, I'm criticizing the interpretation of Ben from this dude. From the lower end, we have that support at 105.8. So coming back to the scene of the crime around here at RSI 55 represents that price. Notice that that is around the confluence of the anchor VWAP to the all-time high. Now on the daily, we started this morning saying that we could potentially today confirm an RSI daily breakout, and that is a big thing actually. So far we are still confirming it, and not just that, but we could be also confirm a breakout from the top of the range on the volume profile, which is something that we have done so many times that I don't feel now like I'm celebrating anything, because we have broken out like a million times in this area, and each and every time we're also going back into the previous range and then not going to the targets that the models say. So really the price action deserves a slap, so it behaves the way it should behave. But you know, price does whatever it wants, right? Models are just there to tell you what is more likely, not what is necessarily gonna happen. Of course, it wouldn't be a nice thing if after all this move up, we end up getting sold out and going back below that level. We have the support around 38.95 on the daily RSI, which is around 99.1 as of today. If we were to close at this precise price, potentially by tomorrow, this becomes a bullish cross on the MACD. I guess it all depends on the price action of tomorrow, because technically this is not crossing yet. I covered the weekly this morning and there are no changes, so you are welcome to watch the video this morning. I also covered the stochastic RSI and everything on the weekly, and on the monthly I covered the CPR and there are no changes there. I still continue to get leverage squeeze sell signals that are low quality, by the way, the number one, so I'm only observing it. I didn't use it to take any decision. This morning also I talk about the signal that I built for the hash rate as a complementing signal to the actual hash ribbon signal, which hasn't necessarily been performing really well. So my version in here, I reviewed in the video in the morning, that has better performance in my opinion in most cases, and I shared this chart also with my Patreon members this morning. Let's do an update on CryptoQuant on the dashboard. Let's see how things are changing. Futures retail activity is few retail. We have still the red flag on the retail orders. Interesting that it shows that, given that there has been 5,000 Bitcoin purchase. So as I say, either it went from over the counter or it has been sliced into very small fragments to appear as retail orders. Okay, let's go into the liquidity and I'm gonna show you this. 111 is the biggest level if we consider mostly degens, right? We're talking about 25x to 100x and beyond. If the market maker was very sharply and quickly to take out all these people, it only needs to go into 111. Let me remove the 10x also from this shape. So it needs to go to 111, possibly around here. But if it really wants to take also the 10x's, then the actual liquidity is ending around 111, 113, 114, and we still have liquidity up until 115. I have entered this morning a new position. I am starting to build a short, and I'm pretty sure that what I'm gonna regret is to have to deal with your comments, and I'm not talking about in general, but specifically to the people that are a little bit more in the trolling side. But anyways, I kind of stopped caring, and since the people that are really supported to the channel wanna hear an update publicly, I'm gonna disclose that I'm currently holding a short. If you wanna learn all the insights, all the plan, the thinking behind, you're welcome to join my Patreon for $10 a month. You get updates on the articles and everything about Bitcoin, or if you join as an elite member, tomorrow we're gonna be doing a PineScript workshop. You get to choose the topics and all of that. We also do technical analysis private sessions once a week with the elite membership. Just have a look at the link in the description for Patreon. So let's look at the order book very quickly. You can see that there is a new selling wall in here, and this starts from around 3 p.m. So 6 hours ago they decided to place this wall in here. Pretty significant one, and it's already having psychological effect in the price because it hasn't been filled fill any order there, but of course this generates an imbalance in the bid versus ask ratio of orders. It is placed at around 1.5% from the price. In here is 3%, so I guess the ratios of 5%, 1 and 2 should be appearing by this time. We'll have a look once we do the surgery of the order book in the next minute. I was looking at this chart today and I was thinking, what if we take all this liquidity and we were to go and pay a visit to this one in here that is getting very juicy? That's just a thought. Of course, we can go into 140. There's plenty of technicals pointing in that direction, but it's been a year full of surprises, roller coaster of events, tweets, Trumps, dumps, and everything. So I think there is a very key element in here. The 109 is very interesting to me. It's also interesting the 103 because on the way down we have that CME gap, and at around 103 we have some fair value gaps that are also pretty attractive. The first one ends at 103.3 and the second at 102.6. And of course this is a breakout, so going there kind of invalidates that breakout and it could produce a lot of fear. But actually, if you look at this whole move like this, a move like that, and then up, she still retains that potential for upside. The problem is if we look at all this area in here that was just a ladder, and I'm kind of with the expectation that maybe they're gonna preserve this modus operandi around here. If that was the case, well then forget about taking profits from a short in this area. It's gonna look more like this. And then you get into 130. Of course, that's gonna turn my short into almost impossible to tolerate, but eventually we are gonna go into a bear market and we should be fine. Not to mention that I have to use risk management around here. At 108 million, we have 32. At 108k in the price, we have 32 million. Then we have 27 million at 109, and we have 43 million at 110. And if you look below the price, we don't see that much support. So we should be expecting to see that bid-ask ratio very lean towards the ask. We can also see the selling wall here on market terminal is right there at 109. It's also visible in here in the order book. Now, if we go into high block capital and we magnify this area in here, now it's clear that there is a lot of ask. There was 0.16 yesterday and it's been constantly very intense as we go up. Now peaking at 14 again. Sometimes this is appearing as red because it's meeting with my threshold, which I'm currently using 15, just to track all those areas where the ask was intense within the 5% deviation of the price. If we focus on different deviations, 10, 1 and 2 away from the price, you can see how dark is that block in here. That means that there is not a lot of support. So I presume that the way they are buying is a very tricky one that doesn't appear as support at all, but still moves the price up. Funding rates are back into the negative, and I think that is a consequence of all this selling wall and all the new sellers that have already entered around here thanks to the limit orders that are at close proximity to the price. And the ratio of longs versus shorts now is reaching 34.7 and is flagged in red because I use that as an alpha to look for shorts, as you can see in here and in all this area there, of course overlapping with other aspects. To be fully honest, I do not like to short when their funding rates are negative. I entered my short when the funding rates were very high in the positive, but suddenly it crashed completely back down into the negative, meaning that many shorts have also entered, possibly from the area of 108. So yeah, now I'm in the short and I'm in an overcrowded area of shorts, but we got 800k of delta of liquidations, putting the longs a higher risk. So there are enough arguments on both sides, just like with every other trade. That is kind of the consequence of having exposures to so much data. And I guess experience and knowing how to manage things when they go wrong and keeping emotions completely away of this game makes it a lot easier. It gives me a lot of pride when I read some comments of people saying that after enough time of watching the videos, they are finally getting it, the way of thinking of this particular way of trading, which I completely agree is not for everybody. It can be a lot simpler, a lot easier. There are so many other methods, but this is the one that works for me. What can I do? Now, let's do a quick wrap up with general markets. After all, I believe that general markets are driving this thing and not necessarily that purchase that I mentioned in the beginning of the video. Of course it helps, but if we didn't have this with general markets breaking out, that purchase will get absorbed by sellers. That's what I feel. DXY seems to be breaking down in here, is very close to take the lows once again. That is something positive actually for risk on assets. The best part of the previous bull market, DXY was doing this leg down, and we've been waiting forever to have such a leg down like this. If we size this leg and we place it around here on the DXY, it seems to be calling for the dollar to eventually reach $96. Right now we are at 97.7, so $1.7 more down, and we're gonna potentially reach our final destination. Why would that work? Well, I use the same alpha but inverse. The last time I connected this with 1985 top, which is right here, and connected with the previous top in 2022. It told me that dollar was gonna top at 110. So why not looking at this and being a little bit hoping for dollar to stop around that area? I don't see why not. Just keep it simple, stupid. We're also seeing the gold breaking down the support. So we had a breakout. This has been incredibly frustrating. After the double bottom, we had a breakout, and then we came back to the support and we built an M, and now we are breaking down from the M. So every pattern has an evil brother. So you have the double bottom, but you can very quickly turn it into an M. You just need another leg, and every single pattern can do that, which sometimes is really annoying. Here you see it upside down. You see the double bottom on the VIX that we were calling for an expansion of the market, and now it's coming back down, back into support. So instead of having now on the VIX a double bottom, now we have an M pattern, which is calling for the VIX to go below the support that has been holding us since December of 2023. Getting in this area in here, guys, means that the market should be doing really well with lower volatility that actually helps for trading environment. And we are seeing a little bit of that already on the Nasdaq, putting a new all-time high today. And if we stay around this range, by Sunday, we are confirming a weekly breakout that should bring the Nasdaq into the top of 75, 76. If we were to fulfill that target on a weekly time frame, that sends the Nasdaq into almost 26,000. That is an additional 17-18% from where we are. So I'm gonna mark it in here because probably I'm going to remove that later, so I want to remember it as a target. And remember that this breakout is not confirmed, number one. Number two, I do not trade breakouts like this. You have to be already invested at the lows when the percentile says that there is blood in the streets, and that breakout only tells you to continue holding. It doesn't tell me to start buying in here, because by Sunday this can come back down thanks to who knows which news, but I can already think about a few that can turn this into just a rejection of resistance weekly and a new low incoming below 17,000. The same goes with S&P, except for the fact that S&P still hasn't put that new all-time high. If you look at the stocks, pretty much all the big ones are helping with this move up, but there is also a ton of red. So there is this perception that everything is performing, but really is the top 10 companies, the largest ones, that are driving everything up. That tends to be the case all the time, but I don't think that that is sustainable. I don't think that that is healthy. It kind of hides that really what we have is a big piece of shit under the carpet, and the smell is coming from everywhere. Anyways, I think this video is already too long, so let me just wrap it up with some quick closing thoughts. I think 109 is doable. I think 111 is also doable. Of course, making it public on Cointelegraph is not great, but you know, there is momentum at the moment. And if general markets continue like that, if Trump doesn't say anything silly, we could continue rallying for a little bit longer. I do like building a short from here. Please don't read that as, okay, Trading Parrot knows what he's talking about. I'm gonna sell my house and put a short from here. That is not not the point. It is a small size position that I'm gonna be building up little by little and explaining step by step with the articles in my Patreon. You are welcome to read that and use it to learn. They are not meant to be there for copying. There is no copy trading. Anyways, thanks so much for watching. I'll see you tomorrow with the next one. Bye bye.